Good morning, traders. Today we are looking at Aussie again and ahead of tomorrow's. It's actually an overnight thing, Thursday, GMT China data. There is actually a trove of data coming out, including GDP, industrial production, um, housing data, retail sales, with, of course, GDP being the one in focus at 2 a.m., if not mistaken. Consensus is for growth to pick up from 4.5 to 4.8 year on year, which is supportive for the Aussie, given its close export and sentiment link to China. At the same time, let's not forget the US dollar is softer as markets price a bit more democracy. In the Middle East, oil has pulled back and risk appetite is back. The S&P 500 is now even trading above its pre-war levels. So macro-wise, the backdrop is also supportive, as long, of course, as China doesn't miss badly and the headlines out of Iran stay contained. So let's move to the chart because this is where it gets interesting. Of course, Aussie is still moving within a broad impulsive structure. From last year's lows, we've been clubbing in a rising channel, and the recent sell-off at we can call it the wave B at 71.90 or so has was a deep but clean correction to 68.34 or so within that uptrend. We didn't lose the channel low. We didn't even go to the RSI 30 level. So price flashed down to that level, which is roughly the lower third of the channel. And from there, buyers stepped back in. Now, since that 68.30 low, we've rallied up impulsively and kind of with good momentum, I would say. And price is now pushing back towards the upper half of the channel. Actually, I would say, no, yeah, well, not upper half, just like the upper in general of the channel. Structurally, this bounce can evolve into a five-wave leg to the upside. So you've got a one and two. Let me just pull out these numbers on the wave. You got a one and a two and three and potentially a four and a five. We can, for now, just change the label on that. Or the fourth wave has finished over here and we are moving higher. Either of these could, it's not going to be known unless we do break above the upper trend line all the way up, right? We break aggressively. That's going to mean that wave four is done. So on top of that, though, we see this particular long-term correction providing support at 61.8 Fibonacci, 72.17. So one way or another, it's not just the 61.8, but also the upper channel resistance, as well as potentially the broadening, the upper trend line of this broadening pattern, which we are speculating it could be around here because this peak is not part of this, of the sloping trend, if that makes sense, to connect waves B and D. So there are three catalysts, technically speaking, that tell us that this could be an area of potential of a potential correction. But in the shorter term, and if you look at the RSI as well, we have more room to go higher. We are currently at 63.30. We can go to 70. Okay, this means that we could move higher up towards that level, towards the 72. It would also be a break, a forced break above the 72 handle, and it would still provide us a divergence on the RSI, a broader divergence to the downside. So first scenario, of course, if China GPT comes in around or slightly above 4.8, and the risk on sentiment remains, this would be a long short-term opportunity to towards that upside target. Okay. But as we approach that zone, of course, we will want to go down on the 4-hour time frame, perhaps even lower, to see where we could potentially meet resistance. And I want you to also see the 100 net Fibonacci comes out around 70 to 40. Okay, now we stopped at 61.8. The next level up is the previous peak at 71.88. Then you've got the rest, the Fibonacci, the trend line, the channel, and the 100 Fibonacci extension of the shorter term leg to the upside. Scenario two, if we spike into the territory, it's not actually a scenario two. I would more like say it's a continuation of scenario one. Spike into that level, of course, and if we see repeated rejections and the RSI failing to make a new high versus January, then the narrative flips. The bias would be short for the medium term. We would be looking to fade the strength in that 72, 72.50 area. And once the rejection is clear, look back toward the middle channel, and perhaps even the prior bottom at 68.30. If China data disappoints or risk sentiment sells, that is a deeper correction, of course, is what would take us back here. Because we could just be simply looking at a very simple and fast pullback. Let's not forget that the RSI currently is also seeing some sort of divergence here on the 4-hour. So don't be surprised if short-term pullbacks, even today, it would be still part of the process, because let's not forget we have plenty of hours until the GDP data come out from China. So in summary, the macro backdrop favors short-term Aussie strength, but the technical picture tells us that the 72, 72.50 zone is where this rally could end. So traders could long with, of course, diet risk. The short term, look for signs of exhaustion and diverge to flip a short if price and China data give the green light. So that is again at 2 a.m. Thursday morning GMT time.